Hello everyone and welcome to Day Trader S&P 500. Today is Tuesday, August 22nd, 2023. This is Dale Woodson, editor of Woodson Wave Report and Day Trader S&P 500. As always, we want to get our YouTube subscribers caught up with what our newsletter subscribers have. Let's take a look at the US 10-year here. Let me make this a little bit better to read. Let's see here. Okay, from that low back here, we have a 1 up, a 2 down, which was a 382, a 3 up, a 4 down, and a 5 up. For the larger wave 1 with a circle around it. Then we had an ABC correction where C equaled A. That took the interest rates down to 3.957. And this is what a third wave looks like. It's almost straight up. Okay, so from this 1 high and 2 low, here's the wave 3 targets. You can see the one right there is that 1 to 1 is 4.433. We've got a 4.562%, a 4.414%, and a 4.727% for the Fibonacci 1.618 multiple. So that's going to be, so we went a bit above this wave 1 high. That's going to be interesting to watch that play out. And also, I don't know if I can squeeze that in there. Let me keep going back. Let me go to a daily on this real quick. Okay, let's see if I can get that in there. Yeah, you can see there. Let me extrapolate this out a little bit. But you can see we went past that previous high back here in October of 22. So that verifies the third wave up 2 different ways, if you will. Okay. So should be interesting, rising interest rates. Let's look at the Qs. I think the Qs did something kind of interesting. Let's go to a hourly chart on that from the high. And again, I'll extrapolate that out. So I think last time we looked, the Qs hadn't completed a 1618 yet, or a first wave down, excuse me. Okay, there's the high back there. On July 19th, again, all the markets don't top at the same time. They don't make a low at the same time. They don't decrease in the same percentage in a bear market, which we've been in for quite some time now, since November in the NASDAQ and the Qs, November of last year and January of last year. So it's been a while. But anyway, we finally got a 5 waves down here. We've got a 1 down, a 2 up, a 3 down, a 4 up. 4 butted up right against the wave 1 low. Okay, unless it's a diagonal triangle, 4 high will stay below the 1 low. Those have been some tremendous trading opportunities. If you're here and you see this 4 go up, you're only wrong like a point. It goes right up and butts up to it, and your reward is down here. Your risk is virtually nothing. I say virtually, it's a point or two, depends on how you trade and where you put your stop, but the reward is, how many points is that? From 374 down to 354, that's 20 points. So it looks like we got the first 5 waves down. Okay, the other indexes, S&P, are catching up with that. But anyway, here is the retracement. You can see the 382 is at 367.45. The 50% is at 371.36. And the 618 retrace is at 375.28. So we'll watch that play out. Okay, I want to get you guys to our newsletter here, what we put out yesterday at the market open. Okay, here we're looking for, we're in the EMinis here. I'll give you guys a bigger overview, but from the wave 2 high on August 10th, we have the 1 down, a 2 up, a 3 down, and we're in the process of a 4 as of yesterday morning. We gave our subscribers these targets here for 4. And of course, the 4 should stay below the wave 1 low, which is 44.59, and the 618 is just below. So those were our targets there, spelled out there. By the way, you know, fourth waves are long and sideways, complicated, and can take on many different patterns, including 4 different triangle patterns. So that's what we're looking at there. We got the larger degree there. Still, that open exhaustion gap is at 42.98. We're getting closer to that, by the way. Okay, let's get you guys to today's market open, and then we had a market close today also. market open report today. Okay, there's where our targets were, 44.33 and 53, and the wave 4 went right in between them, as you can see here. There's where our targets, and it went to the 44.40. It could still go higher. We'll get confirmation that 4 is complete when we break below the wave 3 low there. If it is complete at 44.40, there's our wave 5 targets. I think you can see them there, and it should go below wave 3. I think the first target virtually makes a double bottom there with the third wave. So unless it's a truncated fifth, it should take on one of these larger multiples in the 1.0. Okay, so you can see we've got the 1 down there, the 2 up, and then 3 subdivides in the 1 down, 2 up with the parentheses. There's wave 3, huge wave 3, and then a 4 right here. This doesn't look like it's going to take on any kind of a triangle shape, but it is sitting there, or it sat there all day. It sat there for a day between the 50% and the 618. I think we've got the same things there, fourth waves long and sideways. We'll get into the larger count when we look at the post market from today. Okay, I think I wanted to show you guys the S&P 10-minute, and here it is here. Look at the S&P cash index. Okay, and there is that July 27th high. We've got a 1 down, a 2 up, a little expanded flat, and then within wave 3 we got a 1, 2, 3, and a 4. There's the 4 targets. By the way, it looks like there was a blip here. I don't know that that really happened, that spike right there at 1 o'clock. I think it might have been a mistake maybe with TradingView, because the anyway, that was very odd, but it didn't make any higher high than that one. But that's where 4 is there. It's between the 382 and the 500, and we're looking for a wave 5 down. 4 could still attain higher targets, but it should stay below the wave 1 low. All right, that's in the S&P 10-minute, and I want to get to the ES. Okay, let's get to the ES hourly. I think the best way to look at this, there's so much information here, and this is what we did on today's report. We went look at it. We've been focusing so much on the market from this wave 2 high, which has played out beautifully in terms of Fibonacci and Elliott waves. We're looking at it from the all-time high. By the way, you can see the direct hits up and down, and this third wave of a smaller degree of trend was a direct hit within 3 points there. Okay, let me move that there and clean that up just a little bit. There we go. So we have a 1, 2 in parentheses, 3 right there, 4 up, and an ending diagonal triangle for wave 5. That was interesting, because we had a throw over, fourth wave expanding triangle, followed by a fifth wave ending diagonal triangle. So you really got to know your Elliott waves to not be fooled by this stuff. So that ended 1 down with a circle. There's 2 up, and then wave 3 with a circle is extending. There's 1, there's 2, there's 3, and again there's that 4 at 44.40 between the 50% and the 618. And do I have those targets there? Yeah. So if you look at the 1 down from the July 27th high, and by the way, that was the top at all those different degrees of trend, B being that one there. There you go, 4 degrees of trend. Okay, so that 1 in a circle down here, 2 up there, 3 is a 1.618 multiple at 42.92. And that might be near where that gap is. Okay, so let me make that bigger for you guys. These little circles end up getting off as I readjust. There we go. Okay, so that's the hourly, which let me get out of that full screen mode and get into our report that went out post market today. There it is. I think you'll see the same chart. Okay, it might be easier from that B wave high right there. Same exact thing. There's where 3 equals 1.618. Okay, again, that's the 1 with the circle, the 2 with the circle, and the 3 with the circle. Okay, and there's 4 sitting in between there. So it still has a little bit to go, but possibly, but it looks like from the decline from that 44.40 high, that wave 5 down has begun. Okay, we'll get those targets there. Let's see there. Wave 1 down is complete at the 44.7825 low. Well, you've got it all right there. 1, 2, 3. Okay, target right there, 42.92. Within wave 3, there's the 1, 2, 3, 4 with parentheses, which you see them there. 1, 2, 3, 4, and then our 5 targets I think are in here. Here we go. 5. No, that's retracements for 4. Okay, and there's the 5 targets there. Okay, if the 44.40 high holds for wave 4, that's our wave 5 targets there. And again, just like the S&P cash, I think that 1-to-1 basically gives us a double bottom right there. Okay, and there's 42.92. Let me see if I can get to where that, I think that open gap is around 42.80 something. Let me see if I can find that on there. There it is, 42.98. There's an open gap there. Okay, I'll make that a little bit bigger, get rid of these guys here, and there we go. Okay, there's the 42.98 gap. We're getting close to closing that. That is unusual for futures to have a gap and for it to remain open, because futures are open 23 hours a day. So anyway, that will get closed, and I wanted to put these retracements just in case. This is 5 of C of B, so it's 5 of 3 higher degrees of trend. And again, there's that all-time high, or no, I'm sorry, not the all-time high, the B wave high. Okay, so I'll leave you guys with this one here. It's a pretty good overview of everything at several different degrees of trend, what's going on. So we'll see if this evolves into wave 5. It looks like a good start. 4s can be tricky, so you got to be careful with them, but that's what it looks like so far. Okay, that's it for today, and until next time, take care, everyone.